Thanks everybody so much for coming. We know that you've all worked a long day and braved traffic and other perils to get here, and we really appreciate your attendance, and we'll try and make it interesting and informative for all of you. I'm Elizabeth Potter Scully. This is David Shebby. We are both certified family law specialists and law partners, along with our colleague Jeff Jacobson. And David is the best trial lawyer that I know and knows all kinds of things about Dissomaster, and loves to teach. So I know you'll enjoy his presentation. And we are, you can see that we've got up on the screen Dissomaster. We're going to be doing it a little interactively, inputting information on the computer. You can follow along yourself on your own computer or look up here. If you have questions, it's fine to ask in the middle of the presentation. You don't have to hold them till the end, although we are planning to set aside some time at the end for additional questions and answers as well. I wanted to start off by just making some general comments about client expectations and child support and the Dissomaster. These aren't technical things, but I hope you'll find it helpful. People who are going through divorce crave certainty. One of the things that's most terrifying about the process is the uncertainty, and every question they ask seems to be met with, well, the court has discretion, or it depends on the circumstances, or it's hard to predict. So they're looking for things that seem to have a definitive, objective, quantifiable answer. And one of those things is going to appear to be a Dissomaster printout. But I always like to remind clients, just because it's printed out from a computer doesn't mean that there isn't play in the numbers, or that it can't change, or that updated information or circumstances won't make a big difference in the outcome. You want to make sure that people don't get wedded to some number that they saw on a printout at the beginning of the process and then have a difficult time later understanding why the outcome in their case may need to be different. Often if I'm printing out a Dissomaster preliminary one for a client, I give them that spiel about how it seems objective, but really, it isn't always. And sometimes I take my handy draft stamp and stamp draft all over it, just again to sort of fight against this sense that the clients can develop that this is carved in stone like the commandments and shall not ever be altered. Another just introductory comment that I had was that, when I first started practicing family law, I imagined that there would come a miraculous time when I could just hear about people's circumstances and just kind of have a sense of what the child support would be, that I would finally get it and I would just kind of know and be able to give them a range. It's 15 years and it's never happened. I find that I have to put numbers into Dissomaster and fiddle with it, and sometimes the impact of the things that you put in have an effect on the support that may be counterintuitive. And that is going to be true for your clients as well. People may come in and they may say, hi, bought a house, my expenses have skyrocketed, so my support's got to go down, right? When in fact, if they now have mortgage interest deductions and property tax deductions that they didn't have before, their after-tax income is going to go up and their support may go up. Or somebody may say, well, my ex is married to somebody new that has a ton of money, so the support, that's going to affect the support, right? But if the new spouse income increases tax rates, then that may reduce the guideline support, even though your recipient client may think that the payor is now living high off the hog and should be paying more. So just beware of that. It's counterintuitive, and don't beat yourself up if it doesn't seem to be coming very naturally to you until you actually sit with the computer program and play with the numbers. Okay, David's going to tell us a little bit about reading pay stubs. What do you do when your client brings you the pay stub and says, what should my support be?
All right, everybody, thanks for coming. Does everybody have the handout of a pay stub in front of them? Great. It's also up here, but that may be difficult to see. So we put this together and we struggled a little bit with the topics. We didn't want things that were going to be too obvious, and we didn't want things that were going to be too complex. We're trying to reach a happy medium. But like Liz said, if we're saying something that doesn't make sense to you, please raise your hand, slow me down. I guarantee you there'll be other people in the room who will have the same question. So don't let me get ahead of anybody. Conversely, if it's too obvious for you, I'm sure there are other people who are a little behind you and we'll be learning from. So don't complain. All right, taking a look. The first issue is, how do you read a pay stub, particularly with regard to pre-tax deductions? So if you take a look at this pay stub, what you'll see is gross wages for the pay period of $11,875. Does everybody see that? It's both at the bottom and at the top under hours and earnings. Then, if you look directly below hours and earnings, you can see where it talks about pre-tax items. And there's two pre-tax items. There's something called BEN 125, which is a retirement plan. We know because we asked the client that. And then there's something called medical, which is a medical insurance deduction for $218.50. So what do we do with this on the Dissomaster? Well, the answer is we put the entire gross wages into the box that says wages and salary. I recognize that this is only for a 2-week period, but for simplicity, we're going to pretend that this is for a month period and use these numbers. So for the 2-week, for the gross wages, it's $11,875. Which the next question then becomes, well, wait a minute, that doesn't seem exactly right, because he's not getting paid all that, right? He's having a pre-tax deduction. So we take that pre-tax deduction for his 401k or whatever his retirement plan is, and we put that in adjustments to income. And you see adjustments to income a little further down on your Dissomaster screens. And that's where that's going to go. Now, it would be a little different if this were a mandatory retirement situation. If this were a teacher or a government employee who was exempt from Social Security but had to have a mandatory retirement deduction, then you would put that down in the box, sliding, well, I don't know why that's open. Sliding down, you would put that in the box for mandatory retirement. Does everybody see that? So it's important that the adjustment to income or the mandatory retirement box, it goes there. Then we deal with the medical. Well, it's a pre-tax issue, but still, there's a Dissomaster spot for that. Go up to health insurance and expand, and there it is. Health insurance pre-tax wage deduction. And it just goes right in there. $219. I raise this because this is one of the issues, one of the mistakes I see most frequently, and one of the issues that clients seem to argue with me about. Am I in the way of the screen? I'm sorry. One of the issues that clients seem to argue with me about most frequently, when they say, but wait a minute, I'm not even getting that money. So it shouldn't go into the gross. But it does. Because if you learn one thing today, you got to remember this. The first thing the Dissomaster does is it calculates taxes. Before anything else, before it calculates support, it calculates taxes. So even though we're putting in nets, we're doing that so it can calculate the tax rates and then have the appropriate support. You got to explain that to your clients or they'll freak out. But with the emphasis on it is first and foremost tax calculator, People seem to understand. All right, any questions about this so far? The folks who walked in, we have some handouts. I will pass them. Okay. Any questions on this so far? All right, one other thing I want to flag, another common mistake I see, at the very bottom of the case data form, you have AMT information, alternative minimum tax information. If you have a client who is dealing with alternative minimum tax issues, you need to be extraordinarily careful in working the Dissomaster. You'll know if they have AMT issues because you're going to review their prior tax returns and see if they were paying an AMT. If they are, the only advice I can give you is make sure you have a forensic accountant engaged, or engage one then, and bring them in on it, because it changes everything. And it's not as simple as it seems in just moving things over from the tax return into the Dissomaster when you're looking into future years, because the AMT may go away once you have the support and things like that. So just be cognizant that there are AMT issues out there. Look for them, and if you see them on a tax return, engage a forensic accountant. All right, any questions about any of that? Great, I'll turn it back over to Liz.
Okay, one of the comments that Dave made was he said, this is only for a 2-week period, but we're gonna use it for a monthly period. You wanna make sure when you're looking at your pay stub that you notice the pay frequency. On our pay stub in the upper right-hand corner, you can see it says semi-monthly, and it gives you the pay period. That's the range. A lot of people get confused between bi-weekly and semi-monthly. Semi-monthly means twice a month. Bi-weekly means every other week. And a mistake that I see a lot is someone that gets paid bi-weekly, when the attorney is filling out the income and expense declaration, they simply double that number to come up with a monthly number. But that's not correct because it doesn't acknowledge that some months have 5 weeks. So if you're doing an income and expense declaration and for someone that's paid bi-weekly, you need to multiply the bi-weekly wage by 26 and then divide by 12 in order to get the monthly amount. Otherwise, you're going to end up with an amount that's too low. On the Dissomaster, under wages and salary, if you pull down, you can see it will allow you to directly input the number, so it'll actually calculate it for you. But if you are doing it by hand or working on an income and expense declaration, make sure that you keep straight bi-weekly and semi-monthly, and don't just multiply bi-weekly times 2 when you're trying to come up with the monthly number. Okay, FICA and state tax issues.
All right, so yes, sir.
One question: when you do this, you don't use the client's last tax return. You always, when you're putting the money, the data, in your data method, you use current income. You don't use the last 12 months tax return.
Liz, do you want to talk about Riddle?
I mean, yeah, you can. You need to use whatever increment of time is going to be the best predictor of the future income. Sometimes that's the most recent tax return. So in some cases, depending on whether the person has consistent income, whether their income fluctuates, that might be the number that makes the most sense. If someone is paid differently or paid on commission, and there's maybe a longer period of time that you would want to look at, or a short, they just started a new job, so there's a shorter period of time that you want to look at, you would make that assessment. But the case that discusses that is called marriage of Riddle. And the takeaway from Riddle is you need to use a period of time that's going to be a reasonably accurate predictor of what the future income is going to be.
Yes, Ms. Norton.
Why wouldn't we want to use the year-to-date numbers instead of trying to figure out what the monthly wages are?
You can't, I mean, I like to actually go through, look at the year-to-date income and divide that and see how it matches up with my determination of the monthly income. Sometimes it's higher because someone may have received a bonus from the previous year, which is paid early in the current year. So especially if you're looking to increase income, you might want to use the year-to-date number.
In this case, though, we have $83,000 for a 3-month period, is that right? Am I missing something here? It's $83,000 and it says pay period ending 3/31/2011. So if you use the year-to-date calculator in Dissomaster and you put in, is this from January 1st to March 31st?
See, I don't know, right? One of the issues with year-to-date is you don't know if it's taking into account payment received this year for work last year. If somebody maybe gets paid on January 3rd, that's going to take into account 2 weeks or 4 weeks in the prior year. So you have to be real careful using year-to-date. Any other questions on this? Okay. So the next issue I want to talk about is FICA and state tax issues. We hit on a minute ago the fact that occasionally there's mandatory retirement. Can somebody tell me when there would be a mandatory retirement situation?
Teachers, police officers.
Right, teachers, police officers, firefighters, public employees. And the consequence of having, or the reason they pay mandatory retirement is because they do not pay FICA. So it's critical when you're dealing with one of those employees that you go into the settings in Dissomaster and change it so that the FICA is not being calculated. Remembering that Dissomaster is first and foremost a tax calculator. So go into, you see the settings tabs up here. And let's see, I believe it's under the taxes setting. And you scroll down. And you have, here we go, under federal taxes, include social security, this would say if it were a bigger screen. And depending on who is not paying FICA, you just say on or off. It's not real complex, but people always forget to do it.
Someone has a question.
We have a question from the overflow room.
I am from the overflow room.
You are welcome.
Okay.
You are welcome in the main room.
My question is that I get that the public employees do why they're mandatory retirement. My question is that, for example, if you're representing an attorney who is a partner in a law firm and, based on, documentation that he signed as part of his partnership, he is required to do like capital contributions or is required to put in a certain amount into a 401k pursuant to a contractual agreement. Does that go into the stuff you were doing before?
Adjustments to income.
Okay, so that's where it goes.
Exactly.
Okay.
Yeah, they would not get out of the, yes, that would go into the adjustments to income and not into a mandatory retirement scheme.
Okay. Thank you.
Thank you. Okay, so, simple concept, just don't forget to go into the settings and change it if you're representing somebody who is a government employee, or if the other side is a government employee. Or let me restate that. Don't forget to go in and see if it benefits you to turn it off. Because I gotta tell you, in my experience, more often than not, the other side and the court are both gonna forget to go do this. So you gotta make a tactical decision about whether you wanna raise this issue or not. A similar issue, but I see it a little less frequently, is when somebody is earning out-of-state income. The Dissomaster, being first and foremost a tax calculator, also calculates state income tax. And it assumes that you're paying California's extraordinarily high and radically unfair state income tax. If somebody is in a state without income tax, you need to go into the state tax setting and turn off the state income tax. Include state income tax? No. Or more accurately said, you got to figure out if this is going to benefit you or not. Now, what happens if somebody is in a state with a lower income tax than California? Maybe half of our tax rate. You see here where it has the adjustment? This is dealing with California rates. So if it won't get it exact, but if their state tax rate is about half of ours, then you would make an adjustment to half. You might have to run several of these if you have some income in California and some income out of state. Once you do that, I again decide it's way above my pay grade and I bring in the forensic accountant because I can never figure out the exact way that works. Yes?
When you say half, would you input 0.5 or is there like a multiplier? How do you do half on there?
So this is the new Dissomaster. I believe it's just 0.5. Yep,
Okay.
there it is. All right? So one more thing just to keep in mind, and when it comes up, figure out if it's going to benefit your client or not. Judges will not think of this if you don't point it out. Okay, any questions on FICA? Any questions on out-of-state taxes? Any questions on the taxes tab in general? I just used two kind of general examples, but I'm happy to answer any other questions. Yes, Ms. Norton in the back.
I noticed that if I try and print it, then it tells me that that one tax setting has been changed. If I change, like the FICA, but does it show me that on the screen while I'm working on Dissomaster?
Well, it certainly should. If you go to your results page here, and you see on the top right corner, one setting change.
Yes, I see that, thank you.
See?
Yeah.
These netbooks don't give you the full picture, but you can see it would always alert you to whether or not there's been a setting change. Yes, sir, Mr. Greger.
A bit of a practical question. What do you do with opposing counsel when you explain this to them and they've never heard of this, which is frequently the case? Tell you, I don't know what you're talking about. We've never done this before. And how do you deal with that? Or the judge, for that matter?
All right. Well, you do it differently because with
The judge is not going to tell you I've never done this before. The judge is never.
with opposing counsel, you can mock them a little bit. I guess the easiest way to deal with this is, you see here on the right-hand side, there's a help setting. And if you're dealing with the case data tab, it will give explanations for a lot of it. So you may be able to find it right there on the help setting. The help settings do not seem to match up to any of the alternate tabs. So what you can do is point them to the Dissomaster manual that explains almost all of this, or invite them to meet with a forensic accountant, I suppose. People get embarrassed and they look it up. They don't deny it, I find. They just say, they deny it first and they go look it up.
That was kind of my thought, that you might be okay because a lot of people don't have a particularly nuanced or technical understanding of Dissomaster, and they're not going to want to get involved in a fight that's going to betray the fact that they've never done that before. They may just go have their associate look it up quietly, and you may not have to convince them.
We're falling a little bit behind on time, so we'll move on. Our next topic is Liz, who is talking about what?
Hardship factor.
Hardship factors.
I wanted to spend a little bit of additional time talking about hardship factors because nobody ever talks about them at all. And I think it's an issue where often it has a big effect on the bottom line and there's room for argument. You can make some hay with this issue and it's missed. People, in my experience, assume that if the payor has any other subsequent kids, then they're automatically entitled to a hardship factor for each of those kids. And in fact, it's not automatic, it's discretionary. And it's supposed to address situations where someone is experiencing extreme financial hardship due to justifiable expenses resulting from certain circumstances, which include minimum basic living expenses of these additional children. The code sections that talk about hardship start with Family Code Section 4070 and the next couple sections. You don't need to follow along, but those are in your materials. The court has to state in writing or on the record the reasons supporting the hardship deduction and the facts and circumstances. And in general, the court's supposed to be guided by all of the goals that guide them when they exercise their discretion to set child support. That's in Family Code Section 4073. The reason why they're called hardship factors, by the way, instead of hardship children or hardship kids, although you hear that term used, is because it's possible to have a partial factor. If the circumstance in which that would arise would be if someone has a child whose expenses they want to claim as an extreme financial hardship, but maybe they only have custody of that child 40% of the time, or roughly half the time, something like that. Then your hardship factor would be 0.5. It doesn't have to be always one factor per kid. When the court is figuring out or articulating the findings, or when you're working up your case in order to present information, it's the Dissomaster itself isn't sufficient. You can't just input the number and say, see, Your Honor, this is with a hardship factor of 1, and these are all the findings that you have to make. A case talked about that, Marriage of Carlson, which is again in your materials, that says, look, at the fact a judge prints a piece of paper off a computer doesn't make it talismanic. It doesn't make it magic. You have to articulate the reasoning. Why is it that these living expenses cause an extreme financial hardship, and are they justifiable? Is there evidence of them? It's not something that happens automatically. Another case, Marriage of Paulin, which is also in your materials, which did affirm granting of a hardship, said, look, there was substantial evidence before the court to find that these expenses created an extreme financial hardship for the payor. And the main fact that the court relied on was that the guy's income was much less than his expenses. He had twins, and the cost of the twins had dramatically increased the expenses. So in a case where the payor's expenses dramatically exceed their income, you can rely on that case to say, look, there is an extreme financial hardship that's posed by these additional children. But for a payor who may have additional children, but their income still vastly exceeds their expenses, if I were on the other side, I would say there's no financial hardship at all. The person is making much more than they're spending, and they're not automatically entitled to a hardship deduction. Whether or not they're included can have a pretty dramatic effect on the bottom line child support. So pay attention to the facts. Compare the income and expenses of the payor. Think about what other circumstances there might be in order to support or oppose the argument that the additional children cause an extreme financial hardship. Because, I would argue the fact of having additional children doesn't mean that you automatically get the hardship, although many people just, automatically enter in the number of subsequent kids and don't give it another thought. Okay, perquisites and non-taxable income.
Great. All right, any question on the hardship factors before we move on?
Just real quickly.
Yes, sir.
Does each child count for one? Is that how it usually goes?
Everybody hear the question?
Yeah, the question is, does each child count for one? That would be the default, unless there's some reason to have a partial factor, like the child resides with the payor parent only a fraction of the time. But in Dissomaster, its default setting will be a hardship factor of 1 for every child.
Thank you.
Any other questions of that? Okay, perquisites and non-taxable income. This seems to be coming up more and more, given the trend of the law regarding treating gifts as income. So, when you're dealing with income, of course, you start from the presumption, set forth in law, marriage of law and otherwise, that the income on a pay stub or income, more specifically on a tax return, is presumptively correct. But let's say you've met your evidentiary burden and showed that it's not. That either there's a perquisite that should be included in the income. For example, somebody's King's season tickets that they write off for the business, but they use for personal reasons. Or that gift income should be included. For example, I don't know, one of those, somebody's got money coming in from their parents, let's say. All right, so what do we do with those on the Dissomaster? Well, let's start with perquisites. Let's start with my King's tickets. There are two schools of thought on this, right? There's one school of thought set forth in Marriage of Schultze and otherwise that says these are taxable income. The fact that you haven't been paying taxes on them doesn't really change the fact that we're going to call them taxable income in the future because we expect that you're going to start paying taxes on them if you haven't already. So if that's the case, you would simply put in cost of those tickets or any other perk, either in wages and salaries, if that's the kind of perk it is, or here in other taxable income. But you can make the opposite argument, right? If you're say the person who's not getting the benefit of those tickets, you say, wait a minute. The Dissomaster is first and foremost a tax calculator. So if those tickets cost $100 and we count them as taxable income, the first thing it's going to do is say, after taxes, there's really only $60 left to divvy up for support. So it's not fair to give me my support out of $60 of post-tax income when Shebby's not paying taxes at all on these things. That seems really unfair. And Marriage of McCoy took that position and it said that doesn't seem right to the recipient of support. If he's not paying taxes on it, then you're going to put that income here in non-taxable income, which is where? Here, other non-taxable income. It makes a huge difference. One of the things we're going to talk about at the end is kind of figuring out what matters and what doesn't. This really matters. So give it some thought, depending on which side of the ball you're on, but don't let this issue go unanalyzed. Alter and Kevin Q and other, all these really recent cases that talk about treating gifts and things like that as income, it's kind of the same issue, right? Are you paying taxes on it? Probably not if it's a gift from your parents. Should you be? Well, I don't know. There's gift tax issues. Maybe you don't need to be paying taxes on it. So you got to think it through and figure it out. Is this money that the person should be paying taxes on to begin with? And it may or may not be. But if they should be paying taxes on it, what pitch are you going to make to the judge? Is it a Schultze kind of case or is it a McCoy kind of case? Does that make sense? All right, great. So another consideration. Any questions on that? Yes, Ms. Norton.
If we are considering the parental gifts under Alter and Kevin Q and such, are we putting that in as non-taxable income, or are we arguing that it should be a deviation from guideline?
Well, that depends on which side you're on, right? You could argue that it's, if you want to go beyond the scope of the program, there are cases that talk about, either in high earner cases or situations like that you can use it as a deviation.
So the net result of that is that it would be less support, right?
Not necessarily. I mean, once you get into a deviation from guideline, it could be just about anything.
Okay, thank you.
Any other questions on that? Yes.
So when you're talking about these, if this would really come into play if you're talking about someone maybe who's self-employed and they're writing off a lot of things. And, you know, if they're claiming, say on their I&E, they're claiming, you know, $800 for food, you know, go eating out when there's 2 people in the household. That could be, this is kind of where it would come into play, right?
Yeah, I think that's when you would see it most frequently, although it's not exclusive to that. I could have an employee and I'm, you know, paying for her car wash every week or something, you know, car detailing every week, let's say. You know, so that could really add up. But yeah, you're usually going to see this in the self-employed context when somebody's writing stuff off that they shouldn't. Any other questions on this? All right, great. Calculating timeshare. Elizabeth Scully.
I just have, I'm getting the sense that Dissomaster is first and foremost a tax calculator. It just has dawned on me. Okay, a couple comments on timeshare. What you enter on Dissomaster is the percent of time with the non-custodial parent. So it's going to be an amount of time that's less than 50%. The most that you're going to enter is 49.99%. Dissomaster won't let you put in 50% because there are tax consequences of an exactly equal 50-50 split. In order to claim the dependency exemption, somebody has to have custody of the child more than 50% of the time. So if you actually entered 50, that would mean that neither parent could claim the dependency exemption, and that would be kind of a financially illogical result. So it's going to be up to 49.99%. If there's more than one child and the timeshare isn't the same for the 2 children, you can enter that by, you can expand the line and you can enter in what the percentage is for kid 1 and kid 2. That's not a real common order, but it does happen. And then the percentage time with non-custodial parent is just going to reflect the average of the timeshares for the 2 kids. So it does not, you know, a super complex magical result, but that's how Dissomaster handles it. You know, and I wanted to address, you know, I don't know, hopefully you don't know this already, but it may have been explained, but when there are 2 kids involved, the Dissomaster child support is different for the 2 kids, right? It isn't that each of them gets 50% of the total child support. The numbers are different. This is because Dissomaster is helping you predict what happens when the older child turns 18 or, you know, 19 and they're still in high school. It's predicting when the child support obligation for the older child is going to end. And when the obligation for the older child ends, that's going to reduce the cost associated with caring for the kids. But because there are certain fixed expenses, right, like housing, that aren't going to change, it's not going to reduce the cost of caring for kids by 50%. So that's why child 1, it's always going to be a little bit less than child 2 and the subsequent kids. And it is important when you're doing a judgment to include those breakout numbers, that this is the amount for child 1 and this is the amount for child 2. So that way nobody needs to modify support when the obligation for the older child ends. There isn't going to be any ambiguity about what amount should be paid for the remaining child. Okay, under the Children tab, it gives you a bunch of choices for how to input the timeshare, right? You can, if you know what the percentage is or that's been agreed upon, you can enter that number and it conveniently calculates the number of days associated with that percentage in case that's information that's useful. Another resource that Dissomaster has are these Santa Clara options. These are just standard time-sharing options that are described in detail in the Santa Clara County local rules, but Dissomaster sort of adopted them as a thumbnail you can use these if you've got a pretty standard preset custodial arrangement and you want to just select one of those. But you need to be careful though, if you are using one of these preset options. It's nice that it gives you none as an option. That's really helpful. If you're using the Santa Clara options for part of it, but then you're also adding on something else to your timeshare, be very careful not to overlap or duplicate days. For example, I've just selected the Santa Clara option S, which is 3 days per week, okay? But what if the schedule that you're trying to reflect is 3 days a week plus a 2-week vacation? Don't just add 14 days to the number of days that you've got, because 3 days for each of those vacation weeks is already taken into account in the preset thing. So you would only need to add 8 days. And so just be careful, because sometimes it's convenient to use, the basic schedule matches one of the Santa Clara options, but then there's tweaks here or there, and it's easy to make a mistake and double count days or miss days when you're doing that. Tactics. What the heck is a tactic? How many are there? What do you use them for?
There are 9 tactics with a whole bunch of sub-tactics. And I don't expect anybody, we're not going to go over all of them sufficient to memorize them. But I did want to show you one thing. When I remember when I was new at family law, and of course, Dad wanted 50%, and I'd come here to type in 50%, and it wouldn't take it, right? Kept going down to 49.99. Drove me out of my mind. I couldn't figure out why. But Liz hit on the obvious answer. It's not going to let you commit malpractice by costing both of your clients the dependency deduction by having a 50-50 timeshare. Okay? Does that make sense? Everybody with us? All right. Yes, Mr. Dooley.
I have a question that I think kind of overlaps what she just said and where you're going, and it kind of has to do with why I'm here. Isn't it the case that when you put in the timeshare for the children, if there's more than one child, you have to put in the timeshare, even if it's the same amount all the way through? For instance, 49.99% versus just putting it in the top main entry. In that, doesn't it change? Aren't the numbers different if you don't go in and actually put the information in as to each child, even if the numbers are the same across the board?
I don't think so. The way I do it, which hopefully is correct, is you only need to break it out if the timeshare for each child is different. But if the timeshare for both children is the same, I just enter the number once in the main line, and I don't drop down the menu.
It seems
That's what I did, and somehow I got a different number. I must have done something crazy wrong.
Yeah, it seems that when you drop down the number, it automatically puts in the thing by default.
Okay.
So it wouldn't surprise me if, it was a slight user error there. Mr. Dooley's a friend of mine, that's the only reason I said.
You're on like live TV saying
Yeah,
this.
I apologize. I didn't realize that. All right, tactics. So what the heck are tactics? You see there's a tab here that says tactics. There are 9 tactics. And the tactic that most people are most familiar with and that we seem to see most frequently is tactic 9. Tactic 9 comes out right here below the proposed, the guideline support. The guideline support on the right, and below that there's proposed support. Sometimes the proposed support is the same as the guideline support, and sometimes it is different. So what are the tactics? Tactics are different ways of dealing with taxes. Some of them, tactics 1 through 7, completely ignore the guideline and are completely focused on maximizing net spendable income and minimizing taxes. Very useful for settlement. We'll go through all of them real briefly. Tactic 8 is pretty close to the guideline. What Tactic 8 does is it maximizes net spendable income and then divides what's left according to the guideline. Pretty close. Tactic 9 is consistent with the required guideline. It does not maximize net spendable income, but what it does is it does one thing to try and maximize net spendable income, and that is it transfers dependency exemptions when appropriate. So there are other things that it could do, it only does one thing. Let's take a look. We have one setting changed here. I have no idea what we did to change that setting.
Taxes.
But it was a state tax.
Oh, didn't I fix the, oh, I see, okay.
Oh, sorry.
All right, so now we're back to it. So under our case data here, we have guideline support. Guideline support is 35.35. And if you look at the cash flow on screen 2, you see the net spendable income for each party. The net spendable income is the amount of money that each party has after the consideration of support and after the consideration of taxes. Dad and mom. All right, that looks all right. But then the Dissomaster calculates something for us here called proposed. And let's go back to the result page, and it's right below it. And you see under the proposed support under Tactic 9, father's paying more, $37.72 a month. Bad deal for dad, right? His support's going to go up $200 a month. Not so fast. Let's take a look at the cash flow for the proposed support. And what happens to dad? Dad's net spendable income after consideration of taxes and after consideration of the support he pays goes up by $27. Dad's paying more support, but he's got more money in the end of his in his pocket at the end of the day because he's paying less in taxes. Mom is also getting more money at the end of the day, although significantly less than you might expect given the extra amount of support every month. She's only got $6 a month more. Does everybody see that? Net spendable change from guidelines. You have to be, yes, sir.
I think you got to point out that isn't this combined child and spousal? And
It is.
And that's what affects a lot of this stuff.
It is.
Okay.
It is. If we want to get behind these numbers, it all starts with two things. Number one, remembering that spousal support is deductible to the payor and taxable to the payee. And number two, remembering that the person, the custodial parent with more than 50% of the time is presumptively entitled to claim them as a dependent, but they don't have to. They can give the dad the dependency exemption. And if he's making a lot more money than the mom, that's going to be worth a lot more money to him than it is to her, and they both have more money in their pocket. The government loses, or deficit goes up, but mom and dad both benefit. You have to be a little bit careful. You got to be a little bit careful. For example, in our little analysis here, let me find it. Hold on. In our little analysis here, let's say there's only one kid. See, there's only one kid. Now what happens? Dad still benefits. He's $12 up. But mom is now worse off. She's getting more money every month in support, but at the end of the day, after consideration of taxes, she's not doing as well. So before you agree to a Tactic 9 calculation that you think is going to put more money into everybody's pocket, be really careful. If you're not paying attention, you represent mom, you say, oh, look at this. Father used to pay $32.13. Now father's going to pay $33.42. I'll take it. Big mistake. Actually, small mistake. It was like $2 a month. But a mistake nevertheless. You got to click over to the cash flow screen and see, after consideration of taxes, is it going to help your client or hurt your client? Everybody with me so far? All right, let's say the tactic 9 in our first example benefits both parties. They're both going to come out ahead, and the payor and his or her lawyer doesn't get it, and they say, no, I won't agree. You're asking me to pay above guideline, won't do it. Does the judge have discretion to order you to do it anyway? Anybody? The answer is yes. The judge does have that discretion. So if you see it's going to benefit both parties and the other side won't agree, you can go up to the judge and say, order it anyway. And the way the judge is going to do that is they're going to order one party to sign an IRS form, I think it's 4882 or something like that, that's going to transfer the appropriate exemption. Has to be part of the order. Yes, sir?
Why would the other side not agree if it benefits both
Because
parties?
not everybody understands. I mean, seriously. I mean, it goes back to Mr. Greger's question earlier about what happens if you explain to a lawyer about the FICA and they just don't get it. You know, sometimes people just they just don't get it.
It's the aspect of it that where it seems like you're trying to get your client to agree to something that isn't a guideline order, and that stresses lawyers out.
So, there it is, 8332. So that's tactic 9, and that's the one, I'll come back in 1 second. That's the one you're going to see most frequently. That's the one that by default is on the screen, and that's the one that, because it's still a guideline order, the court can order. I can't really take you through the other 8 tactics because of time constraints, but it's important that you know they're there. And you know you know they're there so you can use them when it's appropriate. Tactic 1, user specified payments for both deductible and non-deductible support. Somebody comes to you and makes a settlement proposal, and they say, this is what we propose. We propose X amount in spousal support, deductible, and X amount in child support, non-deductible. You can enter whatever those numbers are. $1,000, let's say. $1,000, let's say. And then come on over here to the proposed support. You see? And you're comparing guideline above with their proposal below. And it's telling you increased net spendable. Best way to do it, you go over to the cash flow and you'll get a real clear. Boy, that's really going to help Dad. His net spendable income is up by almost $1,000. It's really not a good plan for Mom. She's down $1,240. Everybody see that? All right. Yeah, we have till 8, I'm told, but we're supposed to stop for questions at 7:30, so I'll slow down just a little. Tactics, the other tactics 2 through 7 also completely ignore the guideline, but they allow you to craft creative settlement proposals that are really good for your client. You can see tactic 2. All of these, by the way, are now doing everything possible to minimize taxes. We're going to figure out how much should be in spousal support, how much should be in child support, what are the tax rates of each parties, where should the deductions go. We're going to maximize net spendable income and then split it up in whatever way, you know, the user, the attorney tells the computer to do so. So number 2 would be to minimize taxes and then use user-specified net spendable income to father. The father says, look, I feel really bad about the way I treated Mom. Just make sure I have $5,000 in my pocket at the end of every month after taxes and after support, and give her the rest. You put in the $5,000 and you run the thing, and it should give you. Why isn't it taking? What? Yeah, I thought I hit it. There you go. So there's your proposed cash flow under tactic 2 that we just did. Net spendable, dad has 5. So what does that leave mom with? 58.55. Dad's a little bit down each month. Mom's doing much better each month. So pretty good deal for her, right? And then this will tell you, of course, exactly how how this support should be paid. What percentage should be paid in child support, what percentage should be paid in spousal support, and where the dependency exemptions should go. Oh, here, results, sorry. Right? So in this instance, you see under proposed support, it would all be deductible support. Father would pay $4,522. You're going to call it deductible spousal support, and everybody gets to where they want to be. You with me? Tactic 3, it's the reverse. Now mom says, I left, I feel bad about it. This is how much I need every month to meet my basic needs after taxes are dealt with. Just give me this amount and he can keep the rest. And you can run it. And it's maximizing net spendable income and minimize taxes. Okay, 5 and 6, same concept. We're just dealing with percentages. Now, one side says, as long as I have 30% of the net spendable income, I'm happy. Can't really imagine when you would use 5 and 6, but they're there. All right, 8 comes the closest to the guideline. But instead of, remember we talked about tactic 9, the only thing it does to minimize taxes is it swaps out the dependency exemptions. Tactic 8 does everything possible to minimize taxes, allocating spousal support, allocating child support, swapping out the dependency exemptions, and then with whatever's left, the biggest possible pie it can create for the two folks, then it splits it up according to the guideline. So you end up with the same net spendable income you would according to the guideline. It's really close to guideline. It's a really effective tool for maximizing people's income and doing it in a way, if you have somebody on the other side who understands, to really benefit everybody without anybody feeling taken advantage of, because they're not. There are sub-tactics here. I haven't really gotten into these, but these apply to all of them. Sub-tactic A, find best combined result, two-way payment disallowed. You have mom and dad who are like, wait a minute, we don't want the bother of mom writing a check to dad and dad writing a check to mom, so we're going to not be willing to jump through that hoop. Right? Sometimes that would be the most advantageous situation. They're both paying each other some support. They both get spousal support. They both get deductions in certain ways under certain circumstances. People don't want to deal with that. You check box A. Box B is the best possible situation. It allows two-way payments. It's jumping through hoops, but in a big enough case, you could save everybody a lot of money. Oh, I'm sorry. Tactic F is the best. No. Tactic B is the best. What is Tactic F? The best all-deductible support payment. So when would that come up? Family support. You're dealing with a family support situation and you want 100% of the payment to be deductible and 100% of the recipient income to be taxable. So if you're playing around with family support and trying to figure out, does family support make sense in my case, the first thing you do is calculate it under tactic 8F. And then the second thing you do is you call a forensic accountant and make sure they double check your work. Very, very risky thing to do. But just because it's risky, it shouldn't scare you. It's a radically beneficial thing under the right circumstances because you're really reducing everybody's taxes, in some cases quite dramatically. Don't be afraid of it. Just don't do it alone. All right, and then we've dealt with tactic 9 at the beginning. All right, that's more than you probably ever wanted to know about tactics. Does anybody have any questions? I hesitate to ask this. Does anybody have any questions?
For 8F, you said it's only for family support.
Yes.
But when it says all deductible, could that deal with only spousal support too?
Yeah, it could if there were no kids, right, then by definition, but you probably wouldn't be using it because we wouldn't have to play all those games if there were no kids. Right, we wouldn't be trying to get the best ratio of child and spousal and all of that.
Okay.
Because it simply would be deductible if it were all spousal support.
Unless you designate it as non-deductible spousal support, which you could do. All right, no other questions on tactics? So it was either like really bad and nobody understood it, or it was really good and everybody got it. Yes?
I'll give you a question. Do you have any experience or knowledge of a situation where you would recommend all family support?
Yes. I mean, you have to play with it, but it tends to happen when you have a very high earner on one side and a very low earner on the other side. But beyond that, I don't have enough financial expertise to go into any other permutations.
I don't have a different answer because I shy away from family support because I am afraid of the tax consequences. I should take our own advice and call a forensic, but I would just never get involved in a family support order without expert accounting assistance.
I agree with that. Neither would I. But I would look at it on my own first and have an idea of how to look at it. So at least I have a sense now of, does it make sense? Should I pick up the phone and talk to somebody?
Right, there's no sense in depriving yourself of a tool in your arsenal that might be the perfect fit for a case that you have.
All right, well, moving along then, we've got a couple more topics and then questions.
Can you do the bonus income? Can you hit the buttons?
I'd be happy to.
Just a couple words on bonus income reports. I feel like, start a new case. I feel like one of the, a frequently asked question, and certainly one that I frequently asked for many, many years before I figured it out, has to do with the fact that the bonus income report only goes up to $2,000, and most...
Does everybody see how to create a bonus income report?
Yeah, under reports, you go down. We're going to talk a little bit about a two-way bonus income, meaning when both parents have bonus income, what impact is that going to have on the support? And you can do annual or monthly. So the default that the Dissomaster prints out only goes up to $2,000 in bonus income, and it only shows it to you in increments of $100. And in most cases that I was working on, the bonus that was involved was bigger than $2,000, and I couldn't figure out why it stopped, and I thought maybe, is it just the same for everything higher than $2,000? How you address that is that you go in and you can set the range of bonuses yourself manually, and you can also set or control the increments. If you go under bonus report settings, so you can put in whatever you want. If the payor typically gets a bonus of $7,500 or something like that, then you could do a range from $5,000 to $10,000 or whatever seems to fit the economics of your case. And you can set the increment. If either he's going to get $5,000 or $7,500 or something like that, the increments of $100 seem largely irrelevant. You can put whatever amount you want, and that's how you get the bonus report to print out numbers that actually relate to the finances of the case that you're dealing with. Another question a lot of people have is when you put in bonus and when you put in overtime. You see there's a tab for each, and it gives you it gives you a choice. It doesn't make any substantive difference which you use. The mathematical exercise that Dissomaster goes through is the same for each. But you would typically use bonus income if it's a one-time annual payment, or, only once or twice a year, an infrequent payment, and over time, something that happens monthly. But it's basically stylistic, and mathematically, it doesn't make a difference actually if you use the wrong one or, either one. It's the same calculation that's reflected. When two people are wage earners that might have a bonus, then Dissomaster helpfully.
You didn't like that. All right,
Yeah.
I'll switch it back. That's what it looks like when you run it.
Helpfully shows. Yes. Okay, there's a good question that we'll address. We went through, okay, so going back, we're not talking about two-way bonuses yet. We're still stuck on this page, report settings. Spousal support discount. You're gonna use that, you would leave that at 0 if you're calculating a pendente lite spousal support order. If you want to use this as a tool to calculate a permanent order, then you can put in a spousal support discount, usually between 10 and 15%. That's going to help you generate a number that's a little bit lower that reflects the fact that typically permanent spousal support is less than pendente lite support. So you can set that 10, 15, something in between. That's the typical range. Can we go back to the bonus? Oh, I'm
I think
sorry,
we have
is
a
there a
question.
question?
Aren't you not supposed to use the program to calculate the permanent spousal support because of the factors that you're supposed to take into, the court's supposed to take into consideration in the family code? Are you talking about just for maybe settlement purposes? or-
Exactly, when you're using this as a settlement tool, exactly, you're correct, the court's not permitted to order permanent spousal support based only on the printout because they have to take into account all of the 4320 factors and exercise their discretion in that regard. The discount has to do with coming up with numbers in the context of settlement or mediation or negotiation where the decision-making is outside the context of a judicial officer exercising discretion to make a support order. Okay, so it shows it in two different colors. You would compare, you would look at, if mom's bonus and father's bonus, and you sort of see if one gets, like say if dad got a bonus of 500 and mom got a bonus of 700, then you find out where those meet, and it's 26 is the cost to mom. The red numbers reflect a cost to dad, so additional support that dad would owe if dad is the payor. And the red numbers reflect a cost to mom.
Then below, you have a total child support and change in spousal support as well. So it's all in one place.
Any questions on bonus issues? Okay, the mystical, confusing, often spoken about, and little understood B key. When do we use it? What does it-
Yeah, I won't spend too much time on this, but I am fairly sure that there is at least one person in this room, and probably more, who has heard the term B key and does not know what it means and does not want to ask somebody. Or at least that's how I was at the beginning. So, what does the B key do? Well, it's kind of a technical thing that is way beyond my ability to explain, but it has to do with factoring in the tax consequences of the spousal support. What the Dissomaster does by default is something called fixed shares. And what that means is, once guideline support is created, it will calculate the percentage of the net spendable income, mom and dad. And then you calculate spousal support. And then it functions in the taxes. And then it says, oh, now that we function in the taxes, that percentage is off. So it corrects it. And then it does it again, and then it does it again. And it almost, in perpetuity until it comes to a number. I don't really understand it either. But that's pretty much what it does. It calculates the tax effect of spousal support while keeping the net spendable income steady. And it keeps doing it because after you calculate the support, the net spendable income is off. So then you have to calculate some more support to get to the right net spendable income. And that's how we have the Santa Clara and Alameda guideline as well. So what the heck does the B key do? It cancels all that out. And it doesn't calculate the tax effect of the spousal support. Why is that important? For one and only one reason. Because at least in LA County, it is a very commonly understood thing to say that permanent spousal support should be less than pendente lite spousal support. Permanent spousal support should be less than Santa Clara guideline. And a good starting point in most judges' heads and most litigators' heads is the number after you press the B key. So as you saw, well, you didn't see because you can't see my keyboard, I pressed the B key. And before the B key was pressed, father was paying $19.48.
What view do you need to be in to push the B key to make this?
I think you can do it in just about any, but let's go to case data and look at results, our most basic screen. So you see Santa Clara spousal support, pendente lite spousal support in Los Angeles County. In most cases, father's paying $19.48. And now I'm going to mediation because I want to figure out permanent spousal support. So I hit the B key and it goes down to $15.38. And you know that every mediator and most lawyers are going to have done that too. There's no law that says you can do it. There's no law that says you should do it. I don't know where it came from. All I know is that everybody does it, so that's really all you need to know. Don't walk into a mediation and have somebody say, what does the B key get you? And you don't have any idea what they're talking about. Now you do. Yes, Ms. Norton.
So just to recap, so the B key doesn't affect child support at all?
No, we're only talking about spousal
Thank
support. But child support is by statewide guideline.
Thank you.
So, everybody clear on the B key? I tried to give you a little explanation of what it really does, but now you know just how it works.
It's a thumbnail
Alright.
that you'll see used as a tool to try to come up with a proposal for permanent support as opposed to pendente
Yes.
lite support.
In looking at the screen right now, is there any way to tell what the B key has been pressed?
Kind of. Going back to what we talked earlier, if you go to the top right corner, you'll see in red it says one setting change. So in this case, that is the B key that's been changed, but you don't know that for sure. The other place you can look under Santa Clara spousal support, you see in the parenthetical it says unadjusted.
Right.
And that's what I was talking about. It does not account for the tax consequences. When we take the B key off, it's adjusted, fixed, in the way I just talked about, the fixed percentage of net spendable income after taxes.
How did you take it off?
I press the B key again.
It toggles.
It toggles. All right, so nobody will be caught unawares about what the B key is. Okay, our last category of the evening is Liz, net spendable income payment.
Yeah, this is just super quick. I just wanted to go back to the cash flow tab and talk about some of the lines. I mean, David explained the net spendable tells you what's in someone's pocket on a monthly basis after the taxes, guideline deductions, and payment and receipt of total support. The payment cost benefit line tells you the cost and the benefit of support after considering the tax consequences of spousal support or other deductible support, i.e. family support. And that's a line that I refer to a lot. I mean, there's a lot of stuff that's on your Dissomaster printout that clients won't understand, that you don't always use. But I always look at the payment cost benefit, especially if I'm trying to settle a case and I represent the payor. It's just a useful tool to show someone, look at, yeah, the guideline number is high, but look, it only actually costs you this much to pay this much once you take into account the tax consequences. Sometimes, seeing what the bottom line is helps make the proposal more palatable or helps the client understand, because it's one thing to say, oh yes, support's deductible, and another thing to make that leap and see in front of you, well, what economic impact does that deductibility have on my bottom line? So I always look at the payment cost and benefit, typically if I'm representing a payor. Yeah.
And when they ask you, how do I get there? In other words, do they change their deductions? Do they change their tax structure so that on a monthly basis they actually end up with the benefit and not getting, let's say, a refund at the end of the year? What do you tell them?
Right. You want to?
Take a look at the handout in front of you.
Visualize.
Or if you prefer, take a look at the screen.
Right. The pay stub.
And looking at the pay stub at the very top, right above important message, you see exemptions. And this client of mine, former client of mine, had 21 exemptions at this point. Why would he do such a thing?
Did he have 21 children?
He did not, that I was aware of. But what he did was, after we calculated support, he said to me, my paycheck and my take-home is only X, and you got me paying all this in Y, or at least the state of California does through the guideline. How am I going to make ends meet? And I said to him, you go see your accountant. You're going to have this big old tax deduction at the end of the year from all of your spousal support. You don't have to wait till the end of the year to get it. Go see your accountant, game out what it's going to be, and change your exemptions now. Now, I didn't tell him how many to change, because I didn't want him to change too many and then get mad at me, but I told him to go see his accountant. His accountant told him put 21 in there. So he maximized he dramatically increased his monthly paycheck, but it didn't hurt him because at the end of the year he had the big tax deduction for support. Does that answer your question, Alex?
Yes, thank you.
Any other questions on that? Okay, just a couple of words, and then we'll have a few minutes for questions. My thoughts are this. Number one, at least if you're practicing in LA County, buy Dissomaster. I know they're competing programs, I know they're cheaper, but the judges here use Dissomaster. They're used to seeing it, so you should use it too. I know it's different in other counties. Number two, if you don't have a laptop or a net top to bring to court with you, get one. There's no excuse not to be calculating support there at counsel table with the judge, because you should know Dissomaster better than 95% of the judges out there. Don't let them make mistakes. Three, as we've talked about here, as we've seen, I hope, throughout this, some things matter a lot. For example, is it taxable or non-taxable income? And some things really don't matter at all, right? We looked at one of those tactic 9s and saw it was like a $3 difference. You should know ahead of time what matters and what doesn't, so you know where to focus your argument. You can only do that by playing around with the Dissomaster a lot and looking at the net spendable side and figuring out what matters to me, what doesn't. What arguments do I want to make? What arguments do I don't do and not want to make? It's not a simple, basic algebraic formula. It's a very complex thing with a whole lot of room for good lawyering. And it's very easy to out-lawyer your opponents on the Dissomaster, because so many of them just fill in a few lines from an income and expense declaration and call it, and then let the judge calculate it, and then walk away and get out of there. You can really out-lawyer people here. tip that I thought would reflect, I tried to make it reflect on our example. It doesn't. However, I am told, and I have noticed this, that there is a significant break on child support at about 33.6% of a timeshare. Keep that number in mind, and if you have a timeshare battle, put it in. It is algebraic, it is not linear, and evidently, for some reason, in a lot of cases, there's a big jump. So you may just run that and decide to be a nice guy and settle the case at 33.5% timeshare. That's really good for your client. The other side won't know the difference, what that 0.1% could have meant. So pay attention to that. And I guess the last thing before we stop is that, we'll just take questions. Why don't we just take, are there any questions?
I have just another comment. When someone sends you a proposed Dissomaster, you need to sit there with your own INE and their INEs, and you need to enter the information and run your own Dissomaster. So often, there's just stupid typos in Dissomasters, or someone forgot a 0, or someone didn't put in the right number, and you want to make sure that, basically everyone's dealing with, the correct input information, even if there's a legal argument to be made about whether something should be included or excluded, or how it should be categorized. I've been involved in cases where a mediator just mistyped the income and it spat out a support number, and I was a consulting attorney, and I represented the wife who was the recipient, and was really sort of then browbeaten by the mediator in this session that she should agree to this amount of guideline support, and it was unreasonable, and this was a reasonable number, and the payor really got set in this idea that this was the reasonable amount of support to pay. And it was much less than what she and I had talked about in preparing for the mediation. So we went back and looked at it and discovered it was really just a typo. But something like that certainly affected her experience in that session, and the other side's, perception of what an appropriate support amount should be. Same with judges. They're up there, they're typing it in. They didn't practice family law. They just opened the program for the first time 3 months ago. And I've been in court where judges put in 1 kid instead of 2, or 2 kids instead of 3. When they print it out and they give it to everyone to look at, again, it's not magic, right? It's not talismanic just because a judge printed it out. You look and make sure, did you include all of the kids? Did you include, the appropriate mathematical amount? Always double check that.
All right, so if there's no questions, I guess we'll close with this. I don't know how much this program was, but one of the benefits from it is you get, all the continuing consultation on Dissomaster that you may want or need from me, and I assume from Liz as well. So we have cards up here, especially if you're kind of a solo or a small firm and you're new and you come across something you don't know what the hell to do. Give me a call or send me an email. I'll help you out any way I can. Be happy to do it. There's some of the questions can be basic, some of them will be interesting. We'll learn together. Either way, feel free to do that. So thank you all. Yes, sir.
As a rule of thumb, it's of other platforms besides Dissomaster, approximately how much extra is the software for the Dissomaster? Is there a rule of thumb?
I have no idea. Does anybody know? Does anybody use a competing program?
I think the ex-spouse is like $300 for the program, and Dissomaster's $20 a month or $500 or something like that.
Yeah. Okay, so maybe it's a couple $100 more a year, but it's, in my opinion, if you're in LA County, it's worth the money. All right, thank you all for coming.
Thank you so much.